From where you are in Singapore, are you buying this turnaround Tuesday?
Well, it is certainly a turnaround Tuesday. It was the classic setup, selling on Thursday, Friday and Monday, and selling of more than 1% each day. And that is the classic turnaround Tuesday signal, which means we are very, very confident we get a bounce today. And that is what we're seeing. What does this mean? I have to say it's not particularly encouraging for the long term. Take the center of the storm, Japanese stocks. They rallied 9%. 9%. Biggest move, up move since 2008. When is a 9% move disappointing? When it doesn't even reclaim the losses of the day before. A 9% move is essentially a dead cat bounce in this situation. There is still massive damage. So normally what you get in a turnaround Tuesday is that the gains continue for another couple of sessions. And if we are in a slightly negative market, we'll start getting nervousness again by the Thursday. That is how the classic setup works. I'm not saying it's a strict guideline, but I expect that we'll continue to bounce a little bit more today, probably bounce a little bit tomorrow morning as well, in Asia at least, and then we might get a bit more nervous towards next weekend. I don't think that we've seen the lows of this sell-off yet in most assets. And I think some assets have not properly corrected at all. I'm looking at credit as the obvious example here.
Mark, does volatility go back to where it was, or does it stay more elevated?
Both. What I mean by that is, I think volatility subsides from here. I think it's going to be hard for us to reach the extremes of volatility that we had yesterday on any immediate basis.
Sure.
I'm not, even though I think we have more weakness to come over the coming weeks, I don't expect it to reach those extremes. But no, the lows of volatility are behind us, and I expect volatility to stay elevated in August, just not elevated at the levels we saw yesterday.
So this is all about positioning, Mark, and this is all about kind of reversing moves that you saw 24 hours ago. When do the fundamentals kick back in? Is there a data point that you're watching, or a moment to say, okay, well, now this is more about the fundamentals than the positioning?
It is largely about positioning, but there are three fundamental drivers to some extent that are all tenuous or valid for different reasons. One is the sudden concern about a hard landing in the US. To me, those fears are overblown, and I think that one we probably correct a little bit more next week when we get retail sales, CPI. We've already started correct from ISM yesterday. Then there's the two other factors. There's the AI disappointment. That's one where we're just going to probably recalibrate, to use Guy's words, to a more sensible level of valuations. It's not that the story is invalid, it was that people were getting too euphoric about it, too exuberant about it. And the final part of the story is the BOJ policy misstep that has blown up the carry trade. And I don't think we've fully exercised those demons. And I think the next part of it is a much slower moving one that plays out over the next month or two, because it's the structural carry trade in those derivative notes, in the structured notes, in the real estate lending around the world. So that comes through slowly over the next month or so.